Another wobbly day on Wall Street, the Dow dropping more than 1,000 points for the second time this week.
That's Wall Street, but apparently Main Street didn't get the memo. Jobless claims continue to drop to a near 45-year low.
So what does it all mean for the economy? Here to answer that, host of Varney and Company on the Fox Business Channel, Stuart Varney.
If you're asking me about what does it mean for the economy, I'll tell you very, very clearly, the economy is in very good shape. Thank you very much indeed. Wages are rising. I mean, seriously. Look, the problem here is not the economy. When you look at the market sliding like this, don't expect that the economy is going into recession or even a slowdown. It's not. It's doing extremely well. There's no question about it. And every single item of economic news that we've gotten recently points towards a growing economy expanding at the best rate in years.
Is that what this sell-off is about? So you've got jobless claims down, you've got wages going up, so the economic environment is improving for average Americans, which means the Fed could say, hey, maybe we're going to increase interest rates. The market doesn't like that.
That's part of the problem. When interest rates rise, and they are rising, that makes bonds more attractive or a little bit attractive compared to stocks. There's no risk in a government bond. There's a lot of risk in stocks. That's part of the reason, rising interest rates. But can I just say one more thing here, which is not widely understood, and I'm not sure I understand it either. It's these program trades. It's this algorithmic panic. It's the way the market internally is structured. Think of it like this. As we went into this selling on Monday, we had all these program trades that were geared towards a stable market where prices hadn't gone up and down that much. Suddenly, Monday afternoon, they start to move rapidly. The program trades kick in and it feeds on itself and you're down 1,000 points. Same thing late yesterday afternoon. The robots had taken over, panic selling comes in, all organized by robots, not human beings. That's what happened late yesterday afternoon. Now, wait a second. Those robots can be reorganized by humans to take account of this volatility. And I think that's what's going to go on now. So that panic, intense selling may come to an end fairly soon, not necessarily today, but fairly soon when the humans get back in control of the algorithm.
But ultimately, it's greed that drives the humans to program the machines to look for any changes to try to make as much money as possible. The big question is, how did the government okay this kind of thing?
Well, it's not so much the government that okays it, it's the internal computer models of the big traders, the big banks. There is some regulation, but it's very hard to regulate extremely exotic products, which very few people understand and which are highly leveraged. That means when the selling starts and you're losing money, you got to sell something else to bring the money over here, so the selling intensifies. Very, very hard.
So bottom line, don't panic going into the weekend. Everything's okay.
No, do not panic. Whatever you do not panic.
And the real economy, the economy that hits people's wallets, is improving in a way that Wall Street is, and Wall Street's taking some hits, but it's ultimately stabilized, and you see a real strength to the gains that it has.
No question about it. It's the strongest economy that I've seen in maybe 10 years and getting stronger by the month. That's what's happening.
All right. Stuart Varney's going to be over on the Fox Business Channel just about 40 minutes from right now. Stuart, thank you very much.
Thank you, gentlemen.
All right. Meanwhile,